Good morning, good afternoon, good evening, and good night. You're watching or listening to yet another episode of Engine Room, a podcast by Token Metrics. Maybe you're watching us on YouTube under the username Token Metrics. Maybe you're listening to us in your favorite podcast app. At any rate, we're glad you're here. My name is Dylan Love. I'm the managing editor for cryptocurrency research firm Token Metrics, and I am joined, as we are every Wednesday, by Jacob, Bill, and Forrest. Good morning, good afternoon, good evening, guys.
Hi. Hey.
So I think we got to start right away by talking about a little bit of market violence that took place Monday night into Tuesday and probably even a little bit today. The phrase that I have been reading this morning in all the analysis is leverage washout. So Bill, maybe you can explain it like we're five. What does leverage washout mean? What's that all about?
All right. Well, when the market has been rising steadily without a lot of downdrafts, it lulls people into a sense that they can borrow money to increase the size of their long positions, right? So it's almost like, you can gamble with the rent money is how I would say it. So when the market turns, in order to preserve the rent money, everyone sells rapidly in order to pay off their loans. So if you get enough big people selling and you get a catalyst like, oh my God, the regulators are coming, you can literally wash almost everyone out in one day.
Yeah, it's interesting. It seems like there's basically nothing that had a negative, almost no crypto was unaffected. Even, Cardano seems to be kind of everybody's favorite bright and shiny new thing, soaring above $2, $2.50 lately. Even good old Hoskinson got hit. I guess we got Bitcoin trading between 45 and 46 this morning. Yeah, it's just another day in crypto, basically. Does anybody?
Yeah, the thing about September is, I call it Rectember. The only good news that might be that maybe they did it all in 1 or 2 or 3 days, right? But, sell in May and go away is from the equity market, and that actually worked in crypto. And I kind of came up with Rectember and Rocktober because, big equity market events can occur in those months. So I've been kind of advising caution. And, I looked at the day after Memorial Day, and I have another story about that maybe for later in the podcast, but I was like, wow.
Yeah. So at the risk of getting too far ahead, Bill, are you basically suggesting, buckle up, hold tight, October will probably be better?
I'm saying give this 2 or 3 days. Normally when you have a leveraged washout, it doesn't end in one day. It takes some indigestion, okay? And then after that, let's see if the market can recover into, say, the fall equinox around September 22nd.
Very good. Jacob, I know you've got a whole slate of news for us to pick apart. What should we start with, man?
Yeah, well, I think we start on El Salvador. Yesterday was coined Bitcoin Day in El Salvador. I think that was also people contributed that as another reason why markets were getting crushed yesterday. I also saw that there was on-chain data that suggested that investors weren't in a rush to close their positions and actually started buying yesterday. So I do think it was mainly due to the widespread liquidations from the derivative markets after people borrowed too much and kind of got crushed. But yeah, let's talk about El Salvador Bitcoin Day. So yesterday was the first day that Bitcoin was officially legal tender in the country. We have the president tweeting that Bitcoin process comes with a learning curve, because I know we've seen over the past few weeks many protests of citizens in El Salvador saying they don't want Bitcoin as a legal tender. They don't want to have to be required to accept it. One reason due to its volatility, and my heart kind of goes out for the people in El Salvador who bought Bitcoin on September 6th and then immediately lost 15% of their portfolio the next day. So that is one kind of large pill to swallow, is the volatility. And I mean, I was thinking maybe we were done, not with volatility as a whole, but with maybe 20% days, but it seems like that's not the case. And I know we've discussed it, whether El Salvador was actually going to require their merchants to accept Bitcoin, or it was just a suggestion. But actually yesterday, the legal counsel of the president of El Salvador stated that businesses are mandated to accept Bitcoin from customers. So they're required to, but they can decide whether they want to receive it in Bitcoin or US dollars once the transaction is settled. But they do have to open up a wallet through El Salvador's, what's the name of the wallet? Their Chivo digital wallet. So they do have to open it up, and they are required to accept it. And yesterday was coined Bitcoin Day because it was the first nation to accept it as legal tender, and automatically loaded on El Salvadorans Chivo wallets was $30 worth of Bitcoin. So in solidarity, global crypto communities went out and bought $30 worth of Bitcoin. So that was really cool to see the rallying behind that.
Mm-hmm. Yeah, I mean, you mentioned your heart goes out to the El Salvadorans who bought a bunch of Bitcoin on September 6th, only to see it kind of drop by 10 to 15% overnight. I think it bears mentioning that the El Salvadoran government is in exactly the same boat. There was news yesterday that they had finalized the purchase of another 200 Bitcoins. If memory serves, I think that raises the total to 400 Bitcoin on their balance sheet. So whether you love El Salvador or hate El Salvador, they're in the boat being rocked just like everybody else.
Yeah, and I actually saw that they bought the dip yesterday too. I think they added on an additional 10 or 15 Bitcoins once it crashed.
Yeah, very good, very good. Did anybody see this tweet that went pretty viral on crypto Twitter? There's a journalist for Bitcoin Magazine who was in San Salvador, the capital. He walked into a McDonald's trying to pay with Bitcoin, fully expecting to be said, sorry, we don't know how to do that. Lo and behold, no problem. Scan this QR code and make a payment over the Lightning Network of all things. So I am impressed, I think is the right word, that El Salvador was able to say, hey, this is the date where we're making this switch. And not only do they successfully make that switch to the point that McDonald's can take Bitcoin, but they're using Lightning. So it's very interesting and exciting. You know, we've got Panama and we've got Cuba in the region basically about to follow suit, it looks like. So it's, you know, the dominoes are starting to fall. The dominoes are starting to fall is the only way I can think to put it. Bill, Forrest, do you guys have anything to add there?
Yeah, I mean, I like seeing crypto adoption, and I'm for crypto adoption in most forms of it, but I've got to say that what they're doing in El Salvador really, it's really weird to see the Bitcoin community cheer this on, because it really goes against everything that Bitcoin originally stood for. I mean, this mandating a currency, I mean, whether that currency is decentralized or not, that is very against the ethos of Bitcoin and decentralization. Having a government step in, mandating that you accept this, I mean, that's very, very centralized. The Lightning Network itself is very, very centralized. There's nothing decentralized about the solution that they're bringing into their country. And I get the reasons why they're doing it, right? They're trying to adopt Bitcoin's monetary policy as their own and fight off inflation and use a currency that is, more decentralized. But the way they're going about it, I think, is very against the ethos that a lot of people that originally got into Bitcoin have. And I think people are cheering it on because ultimately it's going to drive demand for Bitcoin if countries accept it. So they say, oh, number go up, my Bitcoin balance, this is good for me, so I'm just going to cheer it on. But you're starting to play a dangerous game. Like it's not what Bitcoin was originally meant to be. So I'm a little bit split on it. I love to see crypto adoption, but the idea of mandating using a cryptocurrency is just completely opposite to what Bitcoin was originally intended to be used as. So I'm split on it.
Yeah, Forrest, you're raising a great point. Anybody who's subscribed to the Token Metrics newsletter will be receiving an op-ed that basically talks about exactly what you're talking about. When Satoshi, whoever or whatever Satoshi is, when these people or persons designed Bitcoin, it was all about maximizing freedom and individual sovereignty, especially with respect to finance. So now it's kind of interesting / horrifying to see governments mandate, oh, we insist that you use this freedom guaranteeing currency. You have no choice. Right. Yeah. Like I said, these dominoes are beginning to tumble. So we get a front row seat to see how it all plays out, basically.
Yeah, I agree with Forrest. I think that obviously, like we're all saying, it shouldn't be required if it is a freedom guaranteeing form of payment or currency. It should not be forced on people. But I do think that is required for further adoption. I don't hate it that much, but I do like the way Panama is doing it better than El Salvador. So their crypto bill doesn't intend to force any obligatory Bitcoin acceptance. Instead, the legislation calls just to establish freedom to use the cryptocurrencies like Bitcoin or Ether in Panama. So it's promoting acceptance, but it's not requiring acceptance. So I think that's a better way to do it. But I do think nations will have to start accepting it and sometimes even forcing its acceptance for it to become complete mainstream. And I don't know, Forrest, do you have another idea in mind for a way that this could happen without the force of its acceptance?
Yeah, I mean, I don't think that it needs to be mandated at all. I think ultimately people will always move towards a solution that is better. We've seen adoption of Dash. I know Bill loves himself some Dash in some Latin American and Central American countries. We're seeing Bitcoin Cash adoption pick up in Europe, and among many small. I think it's better to grow these things organically than to also try to force the Bitcoin as the solution, right? There's Bitcoin. I love Bitcoin, right? But it does have its pros and cons. Like the Lightning Network, in my opinion, is a little bit too centralized. It's trading off centralization for speed. And there's other cryptocurrencies out there like Dash, like Bitcoin Cash, like Nano that are on the layer one network, decentralized network, more or just instantaneous and at extremely low fee. So I don't like that the government's coming in and saying Bitcoin is what you're going to use. I would prefer them to say we are expanding an initiative to accept cryptocurrency and cryptocurrency based solutions, whether that's Bitcoin, whether that's a settlement layer or foreign exchange layer using Ripple or Quant, whether that's using Nano, whatever it is. I think it should be up to the people in private sector to adopt those solutions and decide which solutions work best for them, rather than funneling everything towards one solution that they dictate and then mandate. I think it'll grow organically over time. And actually forcing it or mandating it could be a step in the wrong direction, because now we're going to have some horror stories about, El Salvadorians losing 50, like they're mandating this in a bull market at the worst possible time you could mandate this. If we get hit by a bull market, these El Salvadorians are going to lose 50, 60, 70, 80% of their portfolios in Bitcoin. And it's going to be horrendous. And we're going to have a horror story on our hands. I think the organic adoption is a better approach.
I encountered a little theory yesterday. Let me throw this out to the crowd here, that when you think about how El Salvador has done commerce in the past, by and large, it's hand-to-hand exchanges of cash for whatever the good or service is. Now, people who might not exactly fully understand crypto, they're going to be using this Chivo or Chivo wallet, however it's pronounced. I read a little, I'll call it a little conspiracy theory. I'm comfortable calling it a conspiracy theory, that now the government has a perfect window to conduct financial surveillance as it sees fit. People are going to be using these Chivo wallets. The blockchain is open. Now the government has a direct window into how much tax you should be paying. So yeah, interesting little case here. Interesting little case. This is not.
There's one other point about them mandating it. They're forcing the country off the dollar. About the McDonald's story.
Yeah.
Notice that I don't think you could have paid with the US dollar at the McDonald's. So the Fed's monetary policy frequently becomes the monetary policy of a lot of small countries in the sphere of the United States, if not all over the world, right? Whatever the Fed's doing, it's going to have a huge impact on, everyone else's currency. So the reason they may have mandated it, although suboptimal, is basically to announce we're getting off the dollar, and international entities that want to do business with big companies in El Salvador, we want that business done in Bitcoin, not in the dollar. We want to get off the dollar if possible.
Yeah, lots of food for thought on the El Salvador story. We'll certainly be following it as the news develops. But Jacob, what else do you got? You were talking about Germany and some other stuff.
Yeah, for sure. So recent news that just came out is Germany has a huge asset management firm called Union Investment, and they plan to bring Bitcoin to their private wealth clients. So I think this is a huge step. We're all waiting for this to happen in the United States. But so the company is going to allow clients to have a maximum Bitcoin exposure of 2%. Of total assets for each fund. And this really started back in July when Germany passed a law allowing so-called special funds or special funds, which are allowed to allocate up to 20% of their capital in crypto assets. So I'm just waiting for JP Morgan, BlackRock, Morgan Stanley, et cetera, all the big banks to be like, here for my multi-billion-dollar clients, you guys can now hold 2 to 5% of Bitcoin or Ethereum or Cardano, et cetera. And then we'll really start seeing kind of a shift up. Right now, we're already seeing these institutional buyers buying it through the Grayscale Bitcoin Fund, buying it getting exposure to crypto in the equity markets. But I'm just waiting for these probable US regulations that are going to come that allow these whales to purchase millions or billions of dollars worth of crypto assets, because that'll really balloon the market.
I heard an interesting take on how China versus US versus Europe, how these different geographies innovate. And in China, they innovate first and regulate after the fact. In Europe, they regulate first and innovate within those regulations. Here in the US, we have some kind of hybrid between the two where both are happening at the same time. So, it's an interest. If you're going to be in the crypto business, this is a pretty good country to be in it, because you're not going to worry about retroactive government blowback, but you will have to bob and weave on a daily basis. I can't help but laugh a little bit about this notion that it's taking institutions this long to wake up to the fact that there's money to be made in crypto. Not that it should take them some amount of time, but I mean, like the secret's out, guys. Ray Dalio, Paul Tudor Jones, these are uber billionaires who have no problem letting the world know, hey, we're into crypto. This is interesting and there's something here. Don't put 50% of your portfolio in it, but you could stand to benefit quite a bit from some reasonable amount of exposure. At any rate, at least this notion is getting a little more widespread and being put into practice. Interesting stuff.
I mean, if I was a billionaire and I was a client at one of these big banks, I'd probably leave the big bank. If they're not letting me put my money in crypto, I'm gonna say, screw you guys. I'm going home. I'm gonna go make my own. Maybe I'll just make my own wallet. Don't tell them. I don't know what their regulations are about doing stuff behind the scenes. But like, if they're not letting me put my money into crypto, then I'm not gonna stay with them. Obviously, it's not completely up to them because they do have to follow like SEC laws and US regulations. But I mean, it doesn't make sense to me why, like, they're allowing their clients to miss 100x, 10,000% returns, which, I mean, we haven't seen this.
I think one of the reasons why the banks aren't so enthusiastic is that really all they can do is do research on it. You know, they don't necessarily have trading desks. They can't use crypto because it's decentralized the way they can use centralized products, right? In other words, to get a stock, to buy a stock, you have to go through a broker who then goes to an exchange on your behalf. There's no such mechanism in the legacy market because you can just go directly to the exchange. Mm-hmm. Now, of course, it's classic for Wall Street. You know, after everything on average has 10x over the last year, naturally everybody wants to FOMO in, which is not a good sign. All right. But, you know, institutions are figuring out, mainly because of the yield that they can get on crypto. Total value locked in DeFi goes up daily, right? So people are figuring out. I mean, I saw something in a chat room for institutions that says if you do the math on inflation and economic activity, the Fed funds rate should be at 6%. And right now it's at 0 because the Fed is in a printing money trap, right? So that actual 6% rate can only be found in DeFi. So if you want an actual reflection of reality in rates, it's in DeFi. Institutions and big investors are now figuring that part out.
Yeah, we'll see. We'll see. As more and more countries start to make Bitcoin and other cryptos as legal tender, then it only stands to reason that the legacy markets are going to have to wake up to this. Oh, people are using this. There's a tipping point approaching. And pretty soon 2% will seem really, really, it probably is really conservative, but pretty soon 2% is going to be weird. Why isn't it 20? Why isn't it 50? And so on. Anyway, Jacob, what's next in the news gun here?
Yeah, I mean, I love to just think about how the world's going to be in 20 years once there's new generations taking over, when the millennials are running the world. And I think you find an interesting parallel between crypto adoption and maybe social media adoption. You have a lot of older people in the early 2000s who were like kind of just talking bad on social media. This is never going to take off. Same with iPhones. Why do you need this iPhone? You can just call me. Why are you texting? It's just like all these new ideas that just take a while to get on. But now you have 2 billion people on Facebook, or 3 billion, whatever. There's a third of the world is on Facebook. So I think it's at first it scares people when it's new. I think that's similar with crypto. It's mainly young people on crypto, and a lot of older people who don't understand it are just scared of it and I talk bad about it. But what I'm getting to is there was a very interesting study recently where it was about 1,000 US teenagers, and kind of the results showed that 25% of the teens would invest in crypto, which honestly is a little low. I thought it would be a little higher, compared to 24% in real estate. And then 43% of them said the best bet would to invest their funds in the stock market, the legacy equity market. And 37% said they wouldn't invest at all. They would refrain from investing. So I think it's interesting that a quarter of US teens would invest in crypto. I think that number is only going to get higher. I think one major thing for US teenagers and for me personally was I just wasn't educated about crypto. There's not really any playbook. There's no education about crypto. I mean, I think you go through the US schools, you learn about the US stock market. It's in history books. There's some manuals if you take a finance class, but there's not really much of that crypto education that is required for its adoption, because it's not super simple. It's kind of a complex topic that I don't even fully understand. I think most of us don't fully understand what the hell it is or how it works. I mean, I can pretend like I know, but I think there needs to be some kind of robust education on crypto, which will help its adoption. I think one major flaw in El Salvador, and I think in future countries that adopt crypto, is as maybe I'm wrong. Maybe I don't know that they're
Yeah,
doing
may,
this.
may I interrupt you for one moment, Jacob?
Yeah.
I want to point to a certain piece of robust crypto education that came out by a company called Token Metrics.
Yeah.
Right on.
It's called the Crypto Investing Guide, and it's available basically anywhere you can get a book. If you don't want to pay for it, you can download it and read it as a free ebook. But if you prefer audiobook or physical books, it's as easy as going to Amazon and searching Token Metrics Crypto Investing Guide. We've been working pretty hard on that, and it's real, baby. It's here and it's real. And so whether you're in the USA and you're clueless, or you're in El Salvador and you run a coffee shop and you want to figure out what this Bitcoin thing is all about, this book will help you get a good understanding of that, as well as many, many, many more aspects of investing in crypto at large. So yeah, I agree with you. Generally speaking, there isn't a crypto education problem, but Token Metrics is doing its best to solve this problem. And that book, Crypto Investing Guide, How to Invest in Bitcoin, DeFi, NFTs, and More, by Ian Bellina and the Token Metrics team, boy, is it out there for you to take.
Yeah, definitely.
Here's a story about educating a boomer, right? So I told him, remember when the whole quarantine thing started? How long did it take for toilet paper to be gone? Like a week?
Yeah.
Right.
Quickly.
When Wells Fargo woke up one day and said, we're shutting off, non-credit card, personal lines of credit, shut off. No warning, right? What happens, okay, for a boomer, like say they're leveraged against stocks or real estate? What happens if there's an issue with the banking system where you've got to make payments on assets you owe money on in crypto, right? In other words, what happens if there's a problem with, say, the dollar payment system, or a problem, a bank failure, or something like 2008? What happens if you have to, in order to keep your assets, you would have to keep and make the payments in crypto in order to keep the assets, to have the bank come in and say, oh, I'm taking this. And then they go, that's why I'm like, hey man, you got to have 2% of your money there, a couple payments, mortgage payments in crypto, in case you need it. Right. And then everybody goes, oh, I see.
Yeah. It's good to have a little bit of an emergency fund in crypto, because like you're saying, if banks fail, which is unlikely, but we've seen it happen, there's bank runs where people are running to the bank to pull out cash. If you have your 3 months emergency in crypto, a little more investing, and then the rest allocated elsewhere, I think that's a great way to do it.
Yeah, I'm intrigued to think about a certain nightmare scenario where ACH transfers suddenly are shut down, or SWIFT transfers are shut down. What does that really leave besides crypto? I can't think of any alternatives.
Right. QNT, additional payment systems and routing for either central bank digital currencies, or something like, I don't know, your Dash, your Bitcoin Cash, or your Bitcoin Lightning Network. I mean, essentially like El Salvador, for all the faults in the system, they're setting up not only an alternative currency, but an alternative payment system. Right. And that's really important, because countries can go to war, weird things can happen quickly. Risk management is about identifying what can't happen and then making sure it doesn't. Right. Crypto is risk management. And a lot of people are like, oh, it could go down 50%. They could go, yeah, well, you might not be able to get money. So which would you like?
Yeah,
man. Jacob, do you have any more news items on that list, or is it time to start talking about songs?
Yeah, I was gonna say let's switch over to NFTs, because those have been hot. I think they're cooling down a little bit over the past week. I think yesterday probably scared off some NFT investors, but it's still going strong, as we're seeing the weekly volume of purchases on OpenSea and of NFT total purchases is still trending upwards. Maybe it's plateauing a little bit, but it's a lot higher than it was a few months ago.
Yeah, let me kick off this NFT topic with a question for Forrest. Forrest, I know that one of the perks that comes with a lot of NFTs these days is access to some private Discord server. What are people talking about there?
in these Discord servers?
Yeah. So I'm a crypto whale. I spent, X $1,000 on an invisible pixel, for example. Me and my fellow crypto buddies, we hang out and we chat on this Discord server. What are they talking about there? How do you build a community around this stuff?
Yeah, so I'm actually in one of those through a project that I launched. It sold out in like 6 minutes. We're in a private Discord group talking crypto. It's just people. There's people. The type of people in that the crypto group are the type of people that are willing to spend thousands of dollars on an invisible NFT or an NFT of a rock or something that has no artistic value whatsoever, but you've got the exclusivity and the utility of being in a private Discord group and just sharing information. Information is power, information is money, right? So just, whether it's TA, whether it's this hot new NFT project that no one's heard about yet. People are, Justin Sun paid like I think he paid $1.5 million for an Ether rock. And obviously, paying over $1 million to be in a Discord group, that Discord group is going to be full of very wealthy people that probably have a lot of insider knowledge. So people are just paying for access to, I don't even think it's about clout or bragging that you were able to spend $1 million on a rock. I think it's paying for information.
Yeah, it's paying for those connections because then you get access all of a sudden to 500 other billionaires and you're all in one group, or 500 multimillionaires, and then you can that it's kind of creating a network of it. It's you have instant access to all of these crazy connections that have all of this money. And maybe you're right, it's not just putting it as your profile picture, but it's also then who else has it as their profile picture.
Right. And the thing that's funny is in the NFT world, when the stuff is hot in the Discord groups, a lot of information is disseminated. It's not a security, right? The inside information is perfectly okay, right? So the inside information as to what the next hot NFT is, these guys can get in at the floor price. They paid 1.5 million for their Ether rock, but every time they can flip these NFTs, when they get the tip that this is the next hot one in advance, they're making hundreds of thousands of dollars, and this is going on daily, right?
Yeah.
Until Mr. Market probably put the brakes on at least some of it.
Yeah. Jacob, I know you found an interesting little, what was it called? A vampire NFT project by the same artist who was behind Bored Ape Yacht Club.
Yeah, so it was called the Sneaky Vampire Syndicate, which is there was multiple artists in the Bored Ape Yacht Club. He was one of them. So it's their computer generated vampires. There's 8,888 of them. 8 of them are actually hand drawn by the artist himself. And they're made as ERC 721 tokens. They haven't dropped yet, but they are dropping very soon. Last I looked, let's see right now, their Twitter account has 18.5 thousand followers. Yesterday, there was 17,000. The Discord, yesterday I looked, had 36,000. Now it had 30,000. Now it has 33,000. So it's coming soon. I think this is a very hyped project. I think it looks really cool. And obviously their roadmap is similar to a lot of other NFT projects. In the first week, all the holders get a special giveaway. Then a few weeks later, similar to the Bored Ape Kennel Club, all holders of the vampires get a cartoon bat to accompany their vampire. I think it's going to take off. Obviously, the pre-sale hasn't even started yet. There's 8,000 or 9,000 of them. There's 33,000 people in the Discord. So that's 3 times as many people as there are NFTs available. So
demand exceeds supply before it's even live.
Exactly.
Interesting. Forrest, what do we need to know about Kongs? I know that's another hot little NFT project lately.
Yeah, so Rumble Kong. So one thing to keep in mind is we're seeing and I think it was Mike Novogratz who originally tweeted about this. We're seeing something very similar to what we saw with ICOs back in 2017, in that the barrier to entry to write a white paper and create your own ICO is very, very low. Anyone can do it. Literally, you could watch a tutorial on YouTube and throw together a website in a day and make, crazy promises about your ICO token that it's going to change the world. And back in 2017, that's all it took to get people to invest, because ICOs were just blowing up, right? It didn't matter what it was going up in price. They're 20, 50xing overnight. We're seeing that with NFTs. NFTs are going through the roof. There's a lot of quality projects, but there's also a very, very low barrier to entry. You throw together, some JPEGs of rocks and they start going for millions of dollars, right? Anybody can essentially go out and create an NFT collection of 10,000, generative art pieces that have some sort of roadmap or benefits to them. It's pretty easy to do, and a lot of people are doing it. So what we're seeing is we had this huge spike in demand for NFTs, and now we're having all of these projects, all of these people just going and creating 10,000 NFTs of this, 10,000 NFTs of penguins, 10,000 NFTs of, I don't know, I haven't seen stingrays yet, but I'm sure we'll see NFTs of stingrays, every animal, right? The supply is going to, of NFT projects with these similar roadmaps is absolutely exploding. So what's going to happen is, yes, the demand is very high, but the supply is going to increase very rapidly. And you're going to see only very high quality projects survive. Now, to your question about RumbleKongs, I think that RumbleKongs is a high quality project because of two things. One is the utility of it, right? You have these apes, there's 10,000 apes or Kongs, and they are your players in a 3 versus 3 basketball video game. The second reason that I think RumbleKongs are going to continue to do well is product market fit. They've absolutely nailed product market fit within the basketball community, right? Steph Curry's already owned, he's already bought 5 of these things. Mm-hmm. I think Josh Hart's another NBA player who's in. There's just NBA players starting to get involved in buying these RumbleKongs because you're going to be able to play a video game, and there's already talk of being able to rent them out and stake them and create a team and get sponsorships and get deals for in-game wearables, sponsorships from Nike, stuff like that. So the product market fit here and the ability to go viral within the basketball community, I think, is what makes RumbleKongs really, really solid. It's also why I like Zedrun, because they've nailed the product market fit of horse racing. Right. But then you've got something like Pudgy Penguins. And I know that's a pretty, almost a blue chip project because it was one of the earlier animal-based projects. But I don't know how many people there are that really want to invest in something that's around the art or around just the rarity once the bear market comes. Obviously, it's performed extremely well recently. But if you don't have that product market fit and you're not registering with a community and you're not invoking and inspiring a community to get involved with a project, oh, these are cool, they're all basketball players, we're going to play this video game, that to me is very, very powerful, and why I'm bullish on RumbleKongs. And I'm only seeing it with a couple projects right now. Obviously, you've got your blue chips, you've got your CryptoPunks that have just already gone so viral. You've got your Bored Apes, they've already gone so viral because they were just the early projects. But these other projects popping up, Salty Stingrays I'm sure is going to be one. I don't know if I want to invest in Salty Stingrays. You know what I mean? There's going to be a supply of an overload in the supply of these projects, and I'm afraid we're already seeing it. So it's getting pretty dicey.
Appreciate the input there. Yeah. Guys, that's the end of our time together. Lots going on in crypto as usual, but stay with us. We've got a team of experts to help make this stuff simple and understandable. I want to thank Jacob, Forrest, and Bill for joining us on this Wednesday podcast. Please like this YouTube video. Please subscribe to us on YouTube or your favorite podcast platform. We're here 3 days a week for you, and we appreciate you guys.